Morning, everyone. It's the 18th of March. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Morning, mate. You all right?
Yeah, good. Fun and games this morning.
Yeah. Well, and last night as well, obviously.
Yeah,
Kicked off a tad.
it certainly did. So let's get straight into the headlines. So first up, we talk about some vaccine news. We've got the European Medicine Agency delivering their updated guidance on the AstraZeneca shots safety on Thursday, following a tumultuous few days for the European vaccine programme. The company has been criticised by the European Commission President Ursula von der Leyen, who threatened to use emergency powers to seize vaccine production. So hopefully that they can get that under control and start rolling out the vaccines across Europe. Beyond COVID-19 news, we go to the Federal Reserve, and Chair Jerome Powell stuck firmly to his dovish message yesterday as central banks announced their latest policy decision, repeatedly stressing that interest rates won't rise until there is tangible evidence that the US economy has fully recovered from the hit delivered by COVID-19. And as a result, we saw some fairly sharp price action in a number of assets, obviously all linked to the US dollar, which got absolutely trashed off the back of that news. And ahead of the Fed's decision, there was more speculative and expensive corners of the stock market that took a bit of a hammering prior to that, particularly with the tech sector and also the renewable energy sector being the most visibly damaged prior to the news yesterday. But following that, we did see a fresh push to risk assets and a bit of a recovery, but giving it all back now in the futures by the looks of things.
Yeah.
Do you want to run through some charts for us, Steve?
Yeah, I mean, just talking about the treasuries, you had what's that chart on? Oh yeah, it's a bit of a futures chart, isn't it? So you had the sort of like initial response, and then you sort of like got the spike higher overnight in the last hour. We've sort of seen the treasury yields taking a decent bid up towards 2.5% on the 30-year, and up to 1.74 on the 10-year. So
is it?
No, it's quite a decent reaction to it. Obviously, the European 10-year is that's moved up quite aggressively as well. So quite a decent reaction, and on the back of that, we've sort of seen a little bit of a hello there in gold. Obviously, the weekly chart, we've sort of seen this sort of like positive turnaround, and the levels we were talking about yesterday around about this 1750 level. That's really where we were sort of targeting. 1760 is a bit more of a decent resistance. It was a previous swing low in Feb and swing high in March, and we sort of like stalled in front of it. 1755 we got up to, but you can see what the price action's done in the last hour or so. We're marrying up with them treasuries, so they're sort of like marching on. They're saying, right, doesn't matter what you say, Jerome, Fed's rates are going higher, and that gold doesn't like that, obviously.
Pull back to buy this morning now. I mean, looking at the sort of zoomed out version of that chart you just had, it looked like maybe there's some rounding price action going on there, and the bottom's taking shape.
Yeah, it does feel like that, and I'm sort of, I was long gold, and funny enough, I just sort of like watched it this morning and saw the little bit of a turn, and I took profit, and then I couldn't believe when I sort of turned around a little while later, and it has actually sort of come off. Normally, when I take profit, it continues higher. But yeah, I think I'd like to see what it does around here. I think there potentially could be a bit more follow through, maybe down to the sort of like 1730 level. It doesn't seem to be slowing down yet, so I wouldn't sort of like step in front of it. No. There could be a little bit more. Crude oil, that's sort of been under pressure for the last few days. We can see again a little bit of exhaustion, corrective sequence we're going through. This will sort of like get rid of any overdone, overbought indications, and but again, I think with the dollar strengthening up again, it could sort of like apply a smaller bit of pressure, because we've got these really decent resistance levels that we're struggling to break above and hold above. So I think that oil as well may be on the defensive side this morning. Moving on to indices, we're still sort of struggling to get above the 68.12 level in FTSE. Rejected again this morning. On the DAX, a bit of two-way action. We had the sell-off overnight, and it's opened up this morning, spiked higher, but sort of retracing from them higher levels, 14,750. We've already given about 40-50 ticks away within this hour. So again, it's quite choppy this morning. The Dow under a bit of pressure overnight, had a nice rally to all-time highs again, 33,167 on this chart, and we're seeing a sort of correction lower, bit of profit taking overnight. Nasdaq in the last couple of hours has had a decent sort of correction lower, and we're back below the hourly Ichimoku cloud. 39.60 in the S&Ps keeps trying so hard to get to this 4,000 level to test it. Again, stalled again, new all-time high, 3,989, and we're trading a good sort of like 30 ticks lower than that now. So yeah, the sort of like the positivity seems to have sort of dissipated, and we could be once again look at another choppy session, and we'll see what the US brings this afternoon. But at the moment, the European session doesn't like it.
Okay, so let's have a quick look at some of the FX markets and in reaction to what we saw yesterday from the Fed. First up, we'll look at the squiggles, which are the currency baskets, so we can get a bit of an idea about collectively where currency baskets are moving. At the top of the list there, you've got the Canadian dollar, which continues to be very strong. Everything really moved higher yesterday on the back of the dollar weakness. The dollar is there in blue. As we can see, there was a little bit of a dip down in yesterday's session, with everything else ticking up quite nicely. If we look at what the dollar's doing today, it is higher. And if we look at how that looks on the standalone chart, this is the dollar index, we can see obviously a nasty looking bearish candle yesterday, but the lows were contained down to these swing lows that we posted on the 11th of March and into this, I guess, band of support, which I've drawn on my chart. So while we remain sort of within that band and down to maybe this 38.2% fib level, there is still an argument that the dollar index could continue to push higher. I think for me, I'm not entirely sure where the level is, where I'll give up on that thought, but for now, I still think there is potential for this to break higher. And I've redrawn these yellow channels to match where the current price action is, and the highs yesterday. Maybe that is some sort of flag or continuation pattern forming, and if it does, then I'm still sort of looking at these levels here. And I as much as I think the dollar, is bearish, I think this could still be a reasonable corrective move higher, and it could still be bearish. But I think we do need to see a little bit of unwinding of this dollar weakness that we've seen. So, not giving up on the bull case on dollar index just yet. If we look at some of the other currency markets, yen continues to be super weak, and then we can see there Aussie is breaking to new highs against that, so looking very strong indeed. If we look at the Aussie currency versus the US dollar, then there is still potential for this this reverse head and shoulders, this head and shoulders pattern that I've drawn on the chart. I think the right shoulder needs to fail around about 78.60. That would be a fresh test of the underside of this channel as well, which technically looks quite nice. So keep an eye on that. As you can see, the volumes have been dipping off as well on this potential right shoulder formation. It's all potential at this stage until it breaks down here. Then we can start calling it a head and shoulders top. But
nice candle as well on the daily. There's sort of like shooting star rejecting it. So definitely, if that carries on, yeah,
I think there is potential for that to take shape, and obviously this will all depend on US dollar potentially moving higher. If we look at Euro Oz, not looking particularly great. The downtrend continues, looking for maybe a retest of these lows that we posted on the 25th of February down at 52.52. Over to euro sterling, continued to bumble around these lows. A lot of indecision going on here and choppy price action that's occurred over the last few sessions or so. We did see a test again of these lows that we posted on the 24th of February at 85.38. And looking as though we're going to maybe have another test of that today. So if that breaks, obviously we'll be looking for a continuation lower in euro versus sterling. Euro yen, again, the yen situation, yen's being trashed, so anything against yen is looking pretty strong. If we look at euro New Zealand, continuation of the strengthening of the New Zealand dollar as people favour riskier assets. Euro dollar, again, flip side on the dollar index chart, so potentially a formation, a top formation taking shape here. We've run into some resistance here at 119.95, so just in front of that 1.2000 level. And while that remains the case, I think there is a case for potential continuation to the downside in that. So not getting too excited with euro dollar just for now. Again, another situation where yen continues to be crushed. And if we look at cable, that continues to trade within this bullish channel. We saw the breakout of the wedge. We've seen maybe a retest of that wedge and remained within the channel and a bit of a push higher. So still favouring sterling over dollar for now. Elsewhere, what have we got? So this we continue to look at. It continues to stall at this 109.20-ish level, which also marries up with this long-term downtrend on dollar yen. Potentially a bit of an engulfing candle taking shape today, but I'm not really going to throw my support behind that unless we can see a clean break above these levels. So still some key levels to watch. Although we did see some funky price action yesterday and some volatility, we're not doing enough to break through these patterns at the moment. So more of the same, I guess. More chop expected in the FX markets for now.
Very nice.
Okay. Guns to the head trades from yesterday. I don't think I've updated the spreadsheet actually because we've been busy this morning doing other stuff. But I know my trade was stopped out, which was cable, which is unfortunate. Let me just throw the chart up on that actually to see how that looked. We talked about that head and shoulders within the head and shoulders.
Yeah.
Just too aggressive on the stop, and that's often the case with these gun to the head challenges because we are trying to sort of flex our muscles and try and go for the big wins on these ones. So I think it was buying here yesterday at 138.98. Stopped out down here before obviously we had the FOMC come in and it shot higher and would have just hit target actually in the last couple of hours, but unfortunately not to be on this in this case. And Steve, what did you trade?
I did gold yesterday. I think I
did you
gold.
get stopped as well? You bought it at 134.7.
Yeah, my stop was at 1729.7. And yes, I got stopped. I got stopped around about 11 o'clock in the morning, and then it rallied up to hit the target at 6 o'clock.
Oh, annoyed. So
they're too aggressive with the stop.
Yeah, and on a heavy news day, we probably should have done a bit better with those. But yeah, maybe. No room for that, is there? Okay, so no good yesterday. So we need to get back on the old horse today. Is there anything that's taken your fancy since we've been talking this morning that you like today?
I'm sort of a little bit with you on the dollar. It's
holding up, isn't it? Despite,
yeah, it is. And I sort of think that the price action in the last hour or so, sort of, I mean, if you look at the dollar index, I mean, look at this candle on the hourly chart as a pretty substantial bullish outside candle. And for me, because it's sort of like reacted from this 11th of March swing low, I would class this as positive. So there's a few different ways of trading it. I'm sort of thinking what's happened with gold. It's sort of like it's collapsed on the back of it. So it's either buying the dollar index, which I'll do, pi dollar index at 91.67. 91.67, and have a stop. Have quite a tight stop because that's the way I roll. My stop is at 91.55, the bottom of this candle we're in now, and that gives me a little bit of room on the upside for a move towards the highs, 92.03, 3-to-1 risk reward. That's what I'm going for.
Lovely. Okay, I'm also going to be taking a bearish view on the dollar, but I'm going to have a look at New Zealand.
I'm taking a bullish view on the dollar.
Sorry, I mean a bullish view on the dollar. Sorry, so used to saying bearish on the dollar. I'm selling New Zealand dollar, US dollar. It's at 72.26. Over that last hour there, we can see a really nasty looking engulfing candle into these resistance levels that I've got here on my chart. I'm going to sell it now, stop loss of 72.72, so 46 ticks, and I'm going to target a move down to these swing lows ish around here at 71.00, looking for 2.74R on that one today.
Nice.
Okay, so what's going to move these trades today? We've got Bank of England at 12, no changes expected on that. But focus on yields and inflation will make an appearance here too, as they have in the US. Beyond that, we have at 12:30 US initial jobless claims, and also the Philly Fed index at the same time. So keep an eye on US dollar pairs around that time. And then later on this evening at 11:30 p.m., we've got Japanese CPI. So a reasonable amount to keep an eye out for today. Also expecting, if she's not already speaking, ECB Governor Christine Lagarde on the wires as well. So plenty to keep us on our toes today.
Yeah, nice.
Anything else, Steve?
No, I just think about the last time they're talking about these sort of vaccines and invoking what thing were they talking about invoking?
She was threatening to. So von der Leyen was threatening to use emergency powers to seize vaccine production, and her intervention marked an escalation in the dispute between Europe and the UK over vaccine shipments.
Yeah, last time they did this was for oil. They did it for oil. It's quite a while ago though. I think it's about sort of 30 odd years ago.
Oh wow!
So yeah, nasty.
Okay.
All right, mate. Well,
yeah. Let's round it up there then. Have a good day, everybody, and we'll be back tomorrow morning.
Perfect.
Cheers, Em.
See you then.
Bye.